Man, sometimes I feel like I'm drinking from a fire hose trying to keep up with everything going on in crypto.
Yeah, I get that. Feels like every time you refresh Twitter, there's like 5 new things you got to learn about.
Totally. It can be a real whirlwind out there. So that's kind of what we're hoping to help you with today, right? To kind of step back from all the noise.
Exactly, yeah. Give you some perspective, like instead of getting lost in all those minute-to-minute updates, we're going to zoom out and see if we can make sense of some of the bigger trends.
Right on. So for this deep dive, we're taking a trip back in time looking at this really interesting period from late March 2025.
Nifty new newsletters,
Yeah.
March 24th through the 28th. We're talking a full work week of crypto news distilled into into this deep dive, I guess.
Exactly. So over those 5 days, we see some really interesting things start to pop up. There's this sense that a bull run might be brewing. MegaETH, this new testnet for scaling Ethereum, comes out. And, there's also this really controversial thing that goes down with a crypto exchange called Hyperliquid.
And we can't forget about the Taproot Wizards. That was huge for the whole Bitcoin ordinal NFT scene.
Oh, right. We got to talk about that. Okay, so maybe we start with the whole bull run vibe. That March 25th newsletter was buzzing about it.
Big time.
Yeah. It seemed like the news about Donald Trump possibly maybe easing back on some of those tariff plans really got the markets going right.
Oh, yeah. It was like someone flipped a switch. Bitcoin almost hit 90,000 bucks.
It's kind of wild to think about how much something like that can impact crypto.
It shows you that crypto's not in a bubble anymore,
Yeah.
right? It's connected to all these other parts of the economy,
Yeah.
and the market is definitely paying attention.
For sure. And it wasn't just Bitcoin, right?
Yeah.
Ethereum had a nice little jump, and even, companies like Coinbase that are really tied into crypto saw their stock prices go up.
Yeah. And it wasn't just the coins themselves. NFTs were hopping too. CryptoPunks in particular had a huge week. Tons of trading, and their floor price jumped up to like 42 ETH. For a collection that's been around for a while, it's a big deal.
It is. One of the things they pointed out in Nifty Noon as a reason for this optimism, and they call this their nifty thought, right?
Oh, yeah.
They said it was because Bitcoin is fundamentally strong, right? And institutions are getting more and more involved. It feels like we hear that a lot.
Oh, yeah, the institutional adoption argument. It's
Yeah.
definitely a recurring theme, and for good reason.
Yeah.
When you have big players like hedge funds or pension funds dipping their toes into crypto, it sends a signal that, it's becoming more mainstream.
Yeah, like it's not just a bunch of, techie people in their basements anymore.
Exactly. But, the newsletter was also pretty careful to say that, that maybe we shouldn't get too carried away with all this price hype just yet.
Right. You got to keep a level head. Not every pump means we're suddenly in a bull market.
It's good to be optimistic, but a little healthy skepticism never hurts.
All right, so speaking of things that are constantly moving and changing, let's talk about stablecoins. There were a ton of updates about them in these newsletters.
Oh, yeah, that was a big theme that week. New projects popping up, regulatory stuff happening. It was a busy time for stablecoins, that's for sure.
Okay, so first up, Donald Trump's World Liberty. They announced that they're launching a stablecoin called USD $1 on the BNB chain. That was March 25th.
Yeah, and just to be clear, stablecoins are like these crypto tokens that try to stay pegged to a regular currency like the US dollar. So the idea with USD $1 is that it's supposed to always be worth about $1.
Makes sense. But there was a bit of a catch, right?
Yeah, there's a quick clarification that USD $1 wasn't actually available for trading yet.
Right. So, big announcement, but you can't actually do anything with it yet.
Classic crypto. Always moving fast, and sometimes the details take a minute to catch up.
Okay, so then we get some news on the regulatory side of things.
Oh.
The CEO of Tether, which is the biggest stablecoin out there, they come out and say they're finally working with a Big Four accounting firm for an audit.
Finally. People have been asking for that for years.
Right, finally some real transparency about what's backing Tether.
Exactly. So that was a pretty big deal.
And then Fidelity, which is, a huge GE name in traditional finance, they file with the SEC for a blockchain-based money market fund. It would use tokenized US dollars on Ethereum.
That's a big vote of confidence for Ethereum. Right?
Yeah. It's like saying, hey, we think this blockchain stuff is legit enough to put our money market fund on.
And money market funds are like a staple of traditional finance, so it's a pretty big deal that they're even considering putting one on a blockchain.
It feels like the lines are starting to blur, between the crypto world and the regular financial world.
Yeah, it's getting harder and harder to tell where one ends and the other begins.
Okay, so then we find out that the White House is pushing for stablecoin legislation in the Senate. That's got to be important, right?
Absolutely. It shows that the government's taking stablecoins seriously and wants to figure out how to regulate them, which, it's a double-edged sword. On the one hand, clear rules could make people more comfortable using stablecoins. But if the rules are too strict, well, it could stifle innovation.
Right, right. Got to strike that balance, you know? Okay, so then we get this news that Circle, which is
Okay.
another big stablecoin, becomes the first one to get approved for use in Japanese markets.
That's a huge win for Circle, right? Japan is a major financial hub, so this is like opening up a whole new world for them.
And it shows that the rest of the world is paying attention to stablecoins too, not just the US.
Definitely. And then there was that report about Sam Altman's World Network. Apparently they're talking to Visa about stablecoin payments. That could be huge.
Right. Like imagine if you could actually use stablecoins to buy stuff with your Visa card.
It would make crypto feel so much more real for a lot of people. That's what a lot of these stablecoin projects are working towards,
Yeah.
making it easy for people to actually use crypto in their everyday lives.
And then JP Morgan, they come out and say they think that that stablecoins that give you a yield, like you earn something just for holding them, that those are going to get really popular.
Yeah. I mean, it makes sense, right? Who doesn't want to earn interest on their money? Especially if it's in a stablecoin that's not supposed to fluctuate in value as much as, Bitcoin or something.
Right, right. But you got to wonder how sustainable those yields are, you know?
That's the big question, right?
Yeah.
And then there's the whole Stable Act of 2025, which was like a whole other thing to try to understand.
Yeah. That was going to take some time to digest, you know? But it shows that the government is trying to figure out how to create a whole legal framework around stablecoins.
It's definitely a sign that stablecoins are here to stay. They're not just some niche thing anymore. They're becoming a real part of the financial system.
Okay, so then we get this other really interesting development. Custodia Bank and Vantage Bank, they issue what they're calling America's first bank-issued stablecoin on a permissionless blockchain.
That's a mouthful. But yeah, it's basically like a bank saying, hey, we trust this blockchain stuff enough to put our own stablecoin on it.
So like more blurring of the lines, you know.
Totally. It's like the traditional finance world and the crypto world are slowly merging.
And then remember that whole thing with Tornado Cash? The U.S. Treasury Department, specifically the OFAC, they actually removed the Tornado Cash website and its Ethereum address from the SDN list.
Yeah, that was a pretty big reversal. The SDN list is, it's like a list of people and organizations that the U.S. government has sanctioned. So basically they're saying that Tornado Cash is no longer considered, a bad actor.
It's definitely a step in the right direction for, for privacy and freedom in the crypto space.
Yeah, a lot of people were worried that the original sanctions were like an overreach by the government.
Right. And just to wrap up the whole stablecoin discussion, it's worth noting that the total market cap for all stablecoins was over $230 billion.
That's a crazy amount of money.
Yeah.
It really shows how important stablecoins are becoming,
Yeah.
They're not just for trading anymore. People are using them for all sorts of things.
Right, right. They're like the backbone of the whole crypto ecosystem.
In a lot of ways, yeah.
All right, so let's shift gears a bit. MegaETH, this new Layer-2 testnet for Ethereum. It launched on March 24th, and there was a lot of hype around it.
People were saying it could do
Yeah.
like a ton of transactions per second, super fast and cheap. And the newsletter, the Nifty Thought, they asked this question, right? Could MegaETH, save Ethereum's price?
Yeah, that's
That's
a big claim, right? But it's an interesting question. Like, does better technology automatically mean a higher price?
Not always, but it definitely helps. I mean, if MegaETH can really deliver on what it's promising, it could make Ethereum a lot more attractive to users, right?
Yeah, because right now, one of the biggest criticisms of Ethereum is that, it's slow and expensive to use. So if MegaETH can solve that problem, it would be a huge deal.
And, there's this whole thing with EIP 4844, which is this Ethereum upgrade that's supposed to make it cheaper for these Layer 2 networks to work, right?
Right. And that could actually be a good thing for the Layer 2s, but maybe not so much for the price of ETH itself.
Yeah. It's a little complicated, but basically, EIP 4844 makes it cheaper for Layer 2s to store data on the Ethereum mainnet, which is great for them, right?
Yeah.
But it also means that they're paying less in fees to the mainnet, and that could mean less ETH gets burned. And some people think that ETH burning is actually a good thing for the price of ETH.
Oh, I see. So it's like a trade-off,
Exactly. And then there's this whole other question about whether MegaETH might launch its own token.
Right. That would definitely change things, wouldn't it?
Big time. If MegaETH has its own token, then a lot of the value created by MegaETH might go to that token instead of ETH.
Right.
Which, it's not necessarily a bad thing for the Ethereum ecosystem as a whole, but it's something to think about.
Yeah, like where does the value ultimately flow?
Exactly. So yeah, MegaETH is definitely something to watch closely. It could be a game changer for Ethereum, but it's still early days.
All right, so let's move on to the Taproot Wizards, shall we? That was a big deal in the Bitcoin NFT space. March 26th and 28th newsletters. Those were the ones that covered it.
Yeah. Taproot Wizards, that was a wild one. So, okay, you had to pay like 0.2 Bitcoin just to get on the allow list, which is basically just, a chance to buy one.
That's a lot of money just for a chance to buy something.
Yeah, it was a high bar to entry for sure. But guess what? The whole collection pretty much minted out. People were eager to get their hands on these things.
Wow. So there's clearly a demand for, for Bitcoin NFTs.
Oh, yeah. It's a whole new world of NFTs on Bitcoin, and people are really excited about it.
So then they had this public Dutch auction for the rest of the collection, and the final price ended up being like 0.31 Bitcoin. That's even more than the allow list price.
Yeah, it went crazy. Dutch auctions, they start high and then the price keeps dropping until everything's sold. So sometimes it creates these moments where people are just like, I got to get in now before it's too late.
And it's like 0.31 Bitcoin. That's a lot of money to spend on an NFT,
Yeah, no kidding. But it shows you how much people believe in the potential of these things. And then secondary trading opened up, and the floor price settled back down to around 0.2 Bitcoin.
So some people took profits, right?
Yeah. Some people flipped them for a quick profit, and maybe the market just, found a more realistic price level.
The Nifty Noon team, they were pretty bullish on Taproot Wizards, They said they thought it could become a top 10 NFT collection by market cap, which they figured would mean a floor price of like 0.36 Bitcoin.
Yeah. That's a pretty bold prediction, but they had their reasons. The team behind Taproot Wizards is really well respected, and they had a lot of big names in the crypto world supporting them, like Kobe and Tolly from Solana.
Oh, wow. So it wasn't just hype, there was some substance behind it.
Yeah, for sure. And they made this point, right, that trading volume is going to be the key thing to watch. Like, price is one thing, but if there's no one buying and selling, well, then it doesn't really matter what the price is.
Right. You need that liquidity.
Exactly. If you want the price to go up, you need people to actually be trading.
All right. So now for something a little more dramatic, shall we? Hyperliquid, the jelly token. This whole thing was covered in the March 27th newsletter, and it sounds like a real mess.
Oh, yeah. That was a crazy story. It all started with this trader who opened a huge short position on jelly, on Hyperliquid, right?
A short position. So basically, they're betting that the price of jelly is going to go down.
Exactly. And jelly, at the time, it had a pretty small market cap, so it wouldn't have taken much to move the price around. And that's kind of what people think happened, right?
They think the trader manipulated the price to make themselves a profit.
Yeah, like they pumped the price up on purpose, which caused their short position to get liquidated. And then, well, Hyperliquid had to take over that position.
Ouch. That's gotta hurt. But then Binance announced that they were going to list jelly.
Right. And people started speculating that maybe, just maybe, Binance had something to do with the price pump.
So like a whole conspiracy theory thing going on.
Oh, yeah. Twitter was going wild. And meanwhile, jelly's market cap was going up, up, up.
So Hyperliquid is stuck holding this short position, and the price of jelly is going through the roof. What did they do?
Well, they did something pretty controversial. They shut down the jelly market on their platform, and they overrode the price that their oracle was giving them. Basically, they said, we're not playing by the rules anymore.
Wow. That's a big move. And it sparked a lot of debate, right? Like some people were saying that this is exactly what's wrong with DeFi, that it's not actually decentralized if someone can just step in and change the rules whenever they want.
Yeah. A lot of people were really upset about it. They felt like Hyperliquid was betraying the whole ethos of DeFi.
But on the other hand, Hyperliquid was probably just trying to protect themselves, right? Like if they hadn't done anything, they could have lost a ton of money.
Yeah, they were in a tough spot. It's a classic dilemma in DeFi, right? How do you balance the need for security and stability with the desire for decentralization?
Right. It's a tricky one. And the newsletter pointed out that this was actually the second time this year that something like this had happened on Hyperliquid.
Yeah, which is not a good look.
Yeah.
It makes you wonder about their risk management, right? Like, are they doing enough to prevent these kinds of things from happening?
All right, so beyond the big headlines, there were a bunch of other interesting news items that popped up in these newsletters. Like GameStop, remember them? They announced that they were going to raise a bunch of money to buy Bitcoin.
Yeah, And then their stock price went down. Go
Yeah.
figure. It's like the meme stock world meets crypto.
Yeah, it's a weird crossover episode,
It shows you that even big companies are trying to figure out how to get involved in crypto, you know?
for sure. And then there was this data point about the amount of Ethereum on exchanges. Apparently, it hit a 10-year low.
Yeah. That's usually seen as a good sign, right? Means people are holding on to their ETH, not selling it.
Right. Like, they're in it for the long haul.
Exactly. And then MicroStrategy, they did their usual thing and bought more Bitcoin.
They can't get enough of that Bitcoin.
Right.
And Fidelity, they officially filed for a Solana ETF, which is pretty cool.
That's huge for Solana, right?
Yeah.
It means that institutions are starting to take it seriously as an investment.
And then there was that DeFi exploit. I think it was on Abracadabra.
Yeah. Abracadabra and GMX, they lost like 13 million bucks. It's a reminder that DeFi is still, the Wild West. You got to be careful out there.
Right, right. Don't put all your eggs in one basket.
And then there was Binance. They listed a bunch of new tokens based on community votes. Some of them had pretty funny names, too.
Oh, yeah. Like Mubarak, CZ's dog.
Yeah. So, like, crypto never takes itself too seriously,
Gotta keep it fun. Okay, and then there were some interesting things happening at the state level. Arizona was considering some bills about public investment in crypto and creating a digital asset reserve fund.
Yeah, that's cool. It shows that governments are starting to think about how to integrate crypto into their economies.
Right. It's not just a fringe thing anymore.
And the newsletters also gave us a quick rundown of, the top NFT sales, the daily winners and losers, all that kind of stuff. CryptoPunks were still at the top. And there were some pretty big price swings in some of the other NFT collections.
Like Quantum Cats and Mockaverse.
Yeah. It's a volatile market, that's for sure. But also, it's exciting. There's always something happening.
So yeah, that last week of March in 2025, it was a busy one in crypto. Lots of optimism, some cool new technology, some drama. It had it all.
It's like a microcosm of the whole crypto world,
Yeah,
Always changing, always evolving. It's what makes it so fascinating, right?
definitely. So here's a question for you, dear listener. Thinking about all the stuff we've talked about today, the potential bull run, MegaETH, the Hyperliquid situation, Taproot Wizards, all of it. What do you think is going to have the biggest impact on the crypto market in the long run, and why? Let us know what you think.
Yeah, we'd love to hear your thoughts. And, one thing's for sure. The crypto world is never boring. There's always something new to learn, something new to explore.
So stay curious, stay informed, and we'll catch you on the next deep dive.